Hey everyone, welcome to Breakout Wednesday for the 13th of July 2022. It's currently 2 p.m. on the West Coast, 4 p.m. on the East Coast, so markets have just closed. First of all, remember this is never financial advice. I'm not a financial advisor. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. Okay, just quickly, here's the All Lords, and we've had tiny rally, bad volume, tiny volume, and a little consolidation, and it'll be interesting to see from here potentially can have another leg down. Obviously, hopefully not, but we're in a bear market, and all bets are off pretty much. Okay, and so I've been really quiet lately with the trading, just a few short-term scalps and stuff, but there is a bit to go through, so let's do it. Just quickly looking at a few of the massive large caps, just for interest's sake. Amazon, okay, and I was talking about Amazon when it was breaking down into this out of this topping pattern, starting to form kind of a stage 4 decline, and now it's had this huge dump consolidation, and it really just has been basing sideways, and it could totally have another leg down. So anyway, just I thought that was interesting, and then there's Apple, which still isn't out of this stage 4 chop. Okay, and it's really rallied back up into this massive support here, and had a bit of an ABC kind of rally, like ABC out of that. And so it would be expected for it to chop around a lot more up here and maybe then start another leg down. So the large caps really are not showing any strength. There is strength out there in biotech and some healthcare stocks. They've been leading lately, and I'll get to that in a sec. Just looking at some of the bigger end of town in Australia, obviously the Commonwealth really just looks like the ASX, kind of the All Ords indices, doesn't it? Okay, a huge dump, little rally, okay, and then basing, and maybe it breaks up out of here, maybe it fakes out and comes down, but this is still very much in downtrend and pretty dangerous to trade from the long side. Okay, and so and look, let's just look at one more, like Rio. Rio is looking very weak, and I guess it's looking super weak in the sense that it really has just been going directly down. It is forming a bit of a channel here. Okay, it's pretty easy to finish this channel off, right? Okay, and then there is a bit of our divergence on the oscillators, and maybe it's a bit overdone, and we might get a snap out of these, this steep channel, and a bit of a rally up out of that. I don't really trade those. I'm just happy to let them go. I might trade them every now and then, I guess, but if that snaps out of there and rallies, that's great. But it's just more something I watch for interest's sake. Okay, and I just try and stick to my bread and butter, and I just really don't care if I don't trade much at all, for months and months on end, other than the odd scalp where I feel like I've got edge, because I just don't feel like there's any point trading unless deep down in your soul that you've got edge whilst you're taking that trade, because trading's hard enough the way it is. If you push trades because you're desperate to have some action, that's a gambling mentality, and you're probably just going to get spanked, more often than not. And so I'm just going to quickly run through my watch list and some stocks that I'm watching that have a bit of relative strength, and there is a mix here for those just pure ASX traders. I'm sorry, my watch list is mixed, and there is some more movement I find on the NASDAQ and New York Stock Exchange stocks at the moment, just because the ASX doesn't have that many healthcare and biotech companies on it. This isn't a biotech, a healthcare company, this one, but and so obviously the ASX does have some, but not heaps. And just quickly before we start, there is some strength on the ASX. If we look at kind of CSL, it's kind of the opposite to a lot of those other large caps, in the sense that this has been having a lockout rally, right, from these lows. And so there's obviously money and being moved into healthcare. Let's just look at one of the others, like ResMed, and it's a similar chart, okay? And so it's interesting to see this rotation of cash into healthcare companies, and I'm gonna just obviously continue to track this. And it was like, for those who were around right after the COVID crash, you'll notice I don't have moving averages on my chart, because right after a massive correction, they tend not to really help as much. Okay, and for those who are around right after that, COVID crash, I didn't have any moving averages on, and I was really just looking for these stocks that had snapped up post rally and then formed a little base of at least 10 days. Okay, and quite often, more often than not, I will see these stocks have a rally, and I'll think to myself, hey, this needs to base for 10 days. So this is day one here, right, on the 7th of July, okay? And they would need to form a really tight base for 10 days, and that would be my minimum to trade it. And that's how I trade stocks that have finished correcting, and all the moving averages have been shot to hell. And there's just no point really looking at them for these types of trades, okay? And trading out of those COVID lows, it was incredibly effective because stocks don't just go straight up. Even 220 and 221, they did kind of just go straight up, but they still had 2, 3, 4 week pullbacks, and so that's what I'm kind of looking for at the moment in many of these stocks that have had a little rally, and then I'm just waiting for 10 days of tight action before pulling the trigger and hoping that rally can continue. I got sidetracked talking about CSL and ResMed. I didn't even mean to do that. Let's just get back to the watch list and some stocks that have just come up mainly for relative strength reasons. Okay, and so ADC on the New York Stock Exchange. Here's like a weekly chart of ADC. And it's pretty clear. I mean, this is just a massive base. It's been going sideways since February 2020. All right, so just before COVID. Here's the COVID crash, obviously. And then it went up and tested it, and then base and tested, and it's forming higher lows here. And so now it came up into Davascan, and it's just tightening, just sitting on top of these old highs, right? Just above these old highs. So ADC certainly interesting setup. FEX never broke out, and I'm still watching it just because it is holding this pattern, but it's just one I'm watching. I don't know if I'm going to trade it, but I'd need to. Now it's kind of, these down slope and resistance signs are always problematic because they're kind of subjective, and they can just change. Like I changed this upsloping one just willy-nilly. It used to be there, and then it didn't work, so I moved it to there. It's all kind of a bit of bullshit, right? And so that's why I really like my horizontal ones, just because they are less subjective, okay? And it's pretty, it's just easier to be consistent with it is what I'm getting at, okay? And so FEX now has some pretty clear kind of places you can use, but got to bear in mind there's just so much resistance above there. Like so many damaged stocks, there is all this overhead supply, and so the run and the move that it can have might be a bit choppier. So anyway, FEX has its issues. HFR, Highfield, okay, and so Highfield is starting to form a little tight right-hand side, kind of a little handle here. As obviously we've got our cup and just a little handle. It's a pretty classic pattern that's forming, and for this to be a proper, pattern, it really does need to just chop around another 4 or 5 days here on low volume. And then if it can just hold this region, so, you want a proper low to happen after this low here. So the 12th of July was its low, and then really it should just chill out for 4 or 5 days after that low to form a proper handle. And so I'm watching HFR. Yes, it's got this overhead supply up here, but HFR showing relative strength in the sense that it's still in an uptrend. All the key moving averages, it's still sitting on top of that. And so I'm gonna put money at risk in stocks that have been able to continue this uptrend any day of the week over putting money at work in a stock that's still in a downtrend, okay, that hasn't been able to put its head above water. And by water, I mean by the key moving averages, okay? There's so many ways to use those. Okay, and IMU, so this is an example, this is just a spitting image of so many stocks and setups that we traded after those COVID lows, okay? And the moving averages just did not help at all, as I've already said. And it was all about looking for stocks that had formed a bit of capitulation and evidence of a low, okay? And IMU has a bit here in the sense that it flushed out below these lows here, okay? And it just kind of came down, it tested making a new low, and then it rejected it, and just everyone was just tired of selling down here. And then it rallied, and some good news came out here in the 27th, a trial or whatever, read it yourself. But and then it had massive volume and a pop, and just this desperation to get into the stock. Okay, a big gap up and huge volume, which is lovely to see, in the sense that, you know, that is just people who have been caught, who love the news and who are just willing to pay anything for it. And then it's consolidated sideways since then on much lower volume. Okay, and so I've left my volume stuff off. Let's just whack it back on. Okay, and now we've got a clear horizontal resistance line, which I far prefer because it's objective. Okay, you can track it better. There's no arguing in my head about where the resistance line is. And we've got, you know, rejections of these lows, a fake out, big desperation volume, and then a tight pattern after. Okay, and so I'm definitely not swinging for the fence on this trade. You know, I'm not trying to ride it up here, but definitely trying to get in and out, and really hit it for a quicker trade. Okay, is how I would definitely be going about that. Now, Merck's another stock. Okay, this is on the New York Stock Exchange. This is a healthcare company. A lot of you will know Merck, and just ignore this bar there. Okay, it's just discrepancy that shouldn't be there. Let's just kind of fan that out. Okay, and so Merck's obviously in an uptrend and showing huge relative strength, and it came up in a Davis scan. And so, you know, we're in the middle of a bear market where very few stocks are showing up in classical Davis boxes. Yet, you know, there are some healthcare stocks doing it, and that to me is a sign, obviously, that there's money in them, and maybe the next bull market is going to be led. The next bull market is not 100% going to be led by the same stocks that led the old bear market. I would be shocked if Tesla was the leader of the next bull market. Okay, I'd be shocked if a lot of those huge semiconductors like Nvidia and AMD, I would be shocked if they're any of the leaders of the next bull market. Netflix, for example, is not going to be the leader of the next bull market. Okay, it's had its time in the sun. The leaders of the next bull market will be companies that a lot of us don't know much about. Okay, we will know a lot about them once they've gone up to a 300 or 400%, and everyone's trying, you know, all the mum and dad investors are piling in. But the leaders of the next bull market are very rarely the leaders of the old bull market. Okay, it very rarely pays to just be obsessed with the old leaders, because you know, it is hard in anything in life to remain a leader for too long. In sport, in stocks, it's all the same. Now, Maine, I missed Maine today just because I was demanding more from it. I wanted it to come down and have another low. This has just rallied off these lows of 17th of June, and it has really hasn't given us a break and a breather. And I just in this market, I just didn't want to touch it. But I just had it in the watch list. But anyway, we'll see what happens. NWE. Now this is this stock that I traded on Breakout Wednesday back here. This setup was really perfect. Okay, and I never really took it off one of my watch lists, and I'm just and it came up in a double top scan actually on Protrader as well. Anyway, it is tightening and tightening and tightening. A lot of the energy shit. I got to get this phone call. I'll be back. Sorry everyone. All right, so NWE. I think we chatted about that, so I'll just move on. Okay, SIGA. So SIGA is obviously stock on the NASDAQ, and they're massive into this monkeypox stuff. Okay, it's really kind of all I know. Now, this is a wild base, right? A huge gap up here, massive volume, and it's basing away, and really, really hard mentally to take trades like this if they do base and then break up. But I guess just casting back, 2 years to the mRNA breaks and a lot of those stocks that were breaking out, during COVID, they were very similar bases. They were wild, loose bases that just had blue sky above them and massive volume on the formation. And I remember how mentally hard it was to pull the trigger on those as well. But then, obviously, the rest is history, right? Some of them went up, 2, 3, 4, 500%. And so SIG, I am watching it. I probably, if this continues to base and breaks, I will trade it, but I'm not exactly going to whack the whole account in it or anything. Okay, it'll just be taking an entry on this break, having a decent stop on it, decently wide stop to give it a bit of wiggle room, and then sit in tight. But certainly not going to bet the house on a risky biotech like that. All right, now. That's it. I haven't been talking about crypto lately because it's all just gone down the shitter, and it's in a massive bear market. And its bear market isn't too dissimilar to all the stocks. I mean, look at Netflix. I mean, it's all very similar, right? Netflix has been just as hammered, and all the tech stocks have. I know this isn't a tech stock really, but so many stocks are just in the same boat as crypto. I don't think it's the end of it. It's just we're in a bear market. Everything is getting hammered. Not everything, but nearly everything. That is all this week. Been really selective and happy just not to trade unless the perfect thing comes along, and then I'll just whack it and get in and get out. Take care. Cheers. Catch you next week. Bye.